Hello, welcome to the European Open briefing for Thursday, April 27th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So the main talk this morning is the tax announcement we had yesterday by the US Treasury Secretary. There was some disappointment in the markets as the tax plans were largely as had been reported in the press prior to the announcement. So there were no real surprises in that announcement yesterday, and there's also doubts about whether or not those big tax cuts would get approved, given how ambitious they are, and also that there's been no detail provided as to how they would be financed. In other news, the Bank of Japan held its policy unchanged this morning at the end of the two-day policy meeting. The bank is much more upbeat about economic growth in Japan, but they did lower their inflation forecast, so that sent the signal that the bank is not likely to tighten policy anytime soon. We had quite a bit of fluctuation with the Canadian dollar and the Mexican peso, and this comes after White House officials suggested that President Trump may withdraw the US from NAFTA, although President Trump did release a statement afterwards saying he wants to renegotiate it rather than terminate NAFTA, so that led to a bit of a rebound in both currencies. And we also have the ECB policy meeting later today as well. They're not expected to change their policy, raise rates or cut back QE for the time being, and the euro is fairly flat ahead of that announcement. So let's start with the dollar-yen pair. We can see that after a strong start to the week, the US fell back from two-week highs yesterday, although it's comfortably above the 111 level against the yen. US Treasury yields, the 10-year yields, also fell back from around 2.35 to 2.31 after the tax plan announcement. So like I said, the main disappointment was the fact that it didn't have any additional surprises to what had already been reported in the press. Also, there's big doubts about whether or not they would get approved in their entirety, given the fact that they would likely lead to a big increase in US government debt, given that they're not the Trump administration is not planning on doing anything to fund those big tax cuts. So that's why we're seeing that sort of rather muted reaction in the markets. But looking at the details more closely, the tax plans were actually described by the Treasury Secretary Steven Mnuchin as one of the biggest tax cuts in US history. The main changes are that they want to cut income tax brackets from the current 7 to just 3. That will consist of 35, 25 and the 10% bands. Corporate tax rate, we already knew about that. They want to cut it from 35 to 15%. And the other main headline grabber was the repatriation tax, which is one-off tax on earnings held by US corporations overseas. So that's being seen as the main point that would likely raise revenue for the US Treasury. But as I said, these are just the initial details. We don't know how or what they're going to look like once they go through Congress. Moving on to the Bank of Japan now. So the bank did say that Japan's economy has been turning toward a moderate expansion. That was actually the most upbeat terminology used by the Bank of Japan in 9 years regarding Japan's economy. But as far as inflation is concerned, the bank said inflation expectations have remained in a weakening phase, and given that at the current moment core CPI is running at 0.2%, that's way off the 2% target, so we don't expect the Bank of Japan to cut back on monetary stimulus in the near future. And looking at the Bank of Japan's quarterly forecast, we can see GDP growth has been revised slightly upwards. For the current fiscal year, they expect growth to to be 1.6%. That's up from 1.5% from the previous forecast. As far as inflation is concerned, it's revised slightly down for the current fiscal year from 1.5 to 1.4, and it's going to rise, forecast to rise to 1.9% in the fiscal year of 2019 to 2020. Now let's have a look at what happened to the Canadian dollar and the Mexican peso. We can see that fluctuation there late yesterday, early this morning, against the US dollar. They had both come under pressure. The Mexican peso hit a 6-week low of 19.29, and the Canadian dollar a 14 months low of 1.3647. The loonie had, of course, already been under pressure from weak oil prices and that surprise announcement of temporary import duties being imposed on some Canadian lumber exports to the US. But there were some reports that White House officials yesterday did actually confirm to the press that Trump had been considering issuing an executive order that would withdraw the US from NAFTA. So that's why both countries, which rely heavily, Mexico and Canada rely heavily on trade with the US, they came under heavy pressure. But then President Trump did issue a statement saying that he doesn't want to terminate it, he wants to renegotiate it. So we saw both currencies firm sharply against the US dollar. And we can see that currently the loonie is at 1.3554 and the Mexican peso at 18.98. A quick look at the euro now. The euro is being helped higher by the weaker dollar after that tax announcement. It's risen back above the 1.09 level. The main focus today will be the European Central Bank meeting. There's been some speculation for some time now about the timing of when the ECB will start to scale back its massive stimulus program. But for the time being, Mario Draghi will likely signal to the markets that the Eurozone economy still needs the monetary, a commodity monetary policy, and we don't expect any change in the bank's forward guidance until June, when new quarterly projections will be available by the ECB. But there's still obviously a lot of market speculation about what Mario Draghi may say in today's press conference. We had another central bank meeting today as well, the Riksbank, Sweden's central bank. They surprised the markets by extending QE. They held their repo rate at minus 0.5%, but they extended their bond purchases by 50 million Swedish krona for the second half of 2017, and they also maintained the near-term easing bias. And this is because the Riksbank is saying inflation will take longer to stabilize around 2%, and now they expect the repo rate to start going up in the second half of 2018. That's slightly later than they had previously signaled. And we saw the krona fall around 0.5% against both the dollar and the euro. We can see the dollar currently buys around 8.80 krona. And today's economic calendar, we can see the main data coming out shortly out of the Eurozone. It's going to be economic sentiment index. That's the business survey for the Eurozone. We're going to have the ECB decision at 11:45 GMT. We're also going to have flash German inflation data, and in the US session the main focus will be durable goods and weekly jobless claims. And here at the bottom, you can see the Bank of Japan's early decision to hold its policy rate at minus 0.1%. That's it from me. Thank you very much for watching, and have a great day.